No Brexit jitters at BP. The British oil giant is doing better than it has in years. Expenses linked to the Gulf of Mexico oil spill of 2010 are finally winding down, and rising global energy demand is beefing up the company's top line.
We've seen with BP really positive moves in its cash flow because of these new projects coming on steam. And obviously, for a stock such as BP, that's an income stock, so its dividend is really important. And there's been lots of concern over the last few years in the low oil price environment about the sustainability of the dividend. Cash flows are moving in the right direction. The oil price has moved in the right direction.
Oil prices are up 25% over last year. That's helped BP raise its profit by 71% to $2.6 billion. Other oil majors aren't far behind. France's Total raked in $2.9 billion in the quarter, and the Anglo-Dutch firm Shell saw its bottom line grow beyond $5 billion. OPEC members and other oil-exporting countries have been limiting output for months, and analysts say a windfall for oil majors is inevitable.
It's hardly a surprise when you have oil prices at multi-year highs, 41, 42-month highs, you're going to have an increase in production. So a solid single-digit increase in production also added to BP's surge in profits.
Higher prices are encouraging oil companies to tap reserves and increase the number of rigs they use. For the markets, that's a strong indication that the global oil glut is ending. Mobin Nasir, TRT World.
Earlier we spoke to Neil Kellard. He's a finance professor at the University of Essex in the UK. He says big oil companies are likely to see more profits through the rest of the year.
I think there's quite a lot of support for oil prices at current levels and possibly above. It looks like global demand will keep on bouncing along, certainly in the US and China. I know that Euro demand has looked slightly weaker recently, but I think that the US is likely to pull us through. And I think there's support for prices of oil at $75 a barrel or more. I don't think OPEC are likely to do anything about their supply cuts or Russia in the near future. So it's quite possible we'll see prices like this, through the rest of the year. And I think, therefore, that oil companies like BP, but particularly BP, are likely to continue with profits in the second, third and fourth quarter of this year, possibly outperforming forecasts. They've had a large increase in cash flow over the last year, and performance both in terms of efficiency and increased production. BP have invested heavily. New production came online last year. New production is coming online this year. And those share buybacks and increased dividends are BP telling us that they're confident about future performance. To a certain extent, I would go along with that. Of course, whether consumers will benefit is another matter. Higher oil prices mean higher petrol prices, so we shall see if consumers will benefit overall. But at the moment, certainly shareholders look set to benefit. BP's debt pile is quite large, I think around $40 billion at the moment. But to a certain extent, for BP at least, in terms of the economic sense of it, it means that the Deepwater Horizon scandal, which of course, and tragedy, which of course was terrible, is to a certain extent behind them. They know what they have to pay over the next few years. And I think that's unlikely to be a large drag anymore on profits for BP. So, of course, BP's profits have not been great over the last few years. These profits are up this year, and I think that's likely to continue over the next few years if we see oil prices continuing at current levels or above. I'd be fairly bullish about BP at the moment. I mean, share prices are up. They're not enormously up on where they were before, but as you say, they have hit a high for recent times. I know that some investment banks were relatively neutral on BP, but I think given these recent profit announcements, I would be more bullish about BP, as I said earlier on, particularly maybe over the next 3 quarters of this year. I think that at least in terms of the way the environment is now, the economic environment, BP look set well for good earnings, reasonable profits, reasonable cash flow, and therefore probably increase share prices at least a little bit over the next year. Well, I think BP, as I said, has become more efficient, and I think particularly with new production coming on stream, it's likely to become more so. Last year it used much more of its oil and gas assets than it had done previously, and so it's looking much more efficient over the next year or so. And so relative to other producers which have looked, I mean, in terms of profits, you know, the oil industry haven't all been making profits over the last year or so, and so I think that BP are looking in a good position on its cost base, on its efficiency, and looking forward, as I said, over the next year.